Hello guys, this is Joseph, the SMC strategy day trader, and today we are going to talk about liquidity grab and liquidity itself. Why? Because liquidity grab and liquidity is a very important concept in SMC strategy and ICT strategy. So before that, if you want to learn more about SMC strategy, or if you don't know how to make profit in the marketplace, contact my WhatsApp or leave the comment below any question and I will answer to you. And don't forget to subscribe my channel and click the like button. Let's get started. So before we know what is liquidity grab, let's understand what is liquidity. Liquidity means a consolidation point between two prices. A consolidation between two prices here. For example, I find a consolidation here. Can see here the price don't want to go out. Instead of going out of these two lines here, you can see the price just get inside of these two lines and go up and down, up and down, up and down. Potentially, it could be more. Just depends on the market. It could be like this long, like for half day, for 2 days. Between weekends, it's more likely to happen. But we can see this is 2025 April 9, 11 p.m. start this consolidation. So if you are a beginner to the market trading, what will you do here when you see this structure? Yes, we do sell here and put our stop loss a higher point and put our profit here to a lower point. And when the price reach here, hit your profit, what will you do? Yes, you go long again at this price, and you put your stop loss here and your profit point here. So not only beginner do this, like not only one people doing this. Instead, there are thousands, millions of people doing the same thing as a beginner because they think it's stable, it's easy to look. Okay, I know the price will hit here. Okay, the price will hit here. The price will go here and not easily breaking out. The price will not go here immediately and going up. I can see the structure, easy to identify, very easy to do profit, and very easy to put my stop loss and my profit point. Like it's even not bad, like risk and profit it's 2.9, risk and profit it's 2.3, better than 2, more than 2 we consider as a very good trade or good trade, equal trade as you want to, as you think. So for a few hours we can see there's a lot of order here. Already a lot of order placed between these two prices. To know how we can check, yeah, we can see majority of the price, the dealing it's happened here, a lot of order here. This point means a lot of action between this line here, this price, there's a lot of action here. So after a few hours, many stop loss, many going short stop loss here. Not only one, can take us 1,000 millions of stop loss here. Stop loss here, not only 1, 2, 3, thousands, hundreds of stop loss here. Maybe this point, maybe a little bit higher, maybe here, maybe there, maybe just above this line. And also the opposite side too. You can see if you're going long, you put your stop loss here like this, just a little bit above, or not even a little bit above, you just this line here. So we can see, or we can imagine a lot of stop loss point here. So when when under a price there's a lot of stop loss, we call it as a liquidity. Here it's a lot of stop loss zone. Stop loss here and also stop loss here. A lot of order put their stop loss between these two zones. So if you are the exchange, if you are the majority, what will you use make benefit from it? Yes, you just break these stop loss, and we call it as a liquidity grab. So how it happen? Simple. You just identify a big candle here, 1 or 2 or 3, maybe most of the time it's two two candle here, you can see the price just get up intensively and hit a lot of stop loss here. This is stop loss zone, a lot of stop loss, a lot of order here, and they break one here, two here, and since first stop loss hit, the price go up a little bit and hit the next stop loss. So it's like a chain action. Once the first hit, the next hit, and the next hit, the price just going up to this point, this support zone as a higher high. There's a high point here. You can imagine a high point here. There's a pressure here, so the price will hit here. But also we can see a lot of stop loss get hit here. So a lot of people just release their order in this zone. And now the majority entry. So we called it liquidity grab or major entry, majority entry, like the big money entry here. So they push the price down to the opposite side. The opposite side here, down just the lower point here. And here's the, by the way, just for quick knowledge, here's the order block and here's the fair value gap. So you can see the price won't go here to fix the fair value gap to make order here. The price want to go back to a fair value gap. That's the basic logic here. Okay, so now we know the price before it goes toward its purpose. Like the purpose is go back to a fair value gap. Now we know. Instead just going down here like immediately. Normally we'll see a liquidity grab to make the price higher, make the better price for majority, because they don't want to buy here. If you buy here, for normal people, it's fine. You buy here, nothing happened, like it's fine. But for majority, it's not good, because even it's 1% higher, 1% more profit, for billions of money, it's a lot. So they tend to push the price to a better price and then entry. So push the price to a better price for entry. It's a little bit hard to understand, but I think most of people can get it. If you don't get it, you just one time, two time, watch again and again, try to understand, because it's easy to understand if you entry here. If you entry here and put your stop loss here, for example, and to this fair value gap, if you entry like a majority, you will have a 3.7 risk and profit. But if you entry here just like normal people, and you put your stop loss at a higher point and go down to a fair value gap, the same profit point, you only get the around 2.6, 2.7 profit and risk. And for the big majority money, it's not good, because since they put billions of money, so even 1% risk, it's more than we can imagine. So they tend to push the price to a better price for entry. So now I'm going to show you a few examples here, just when I'm doing the video. Just to know, right now it's 2025, April 11. When I'm doing the video, I find this consolidation zone. You can see the price get reject here. It's first push up, so we can see reject candle easily. And now we see the liquidity grab here. And now the price going down. And while this price stop, we don't know, but we can do a very good profit here by using this liquidity grab with a higher point. And it's 3.79, very good, excellent. Why I put here? Because easily we can see, if you use a SMC knowledge to 1 hour chart, sorry, it's a little bit massive. Just did this, move this here, you go there, and bye bye. Use 1 hour chart, you can see there's a big fair value gap here, very big. It's 1 hour chart, 1 hour fair value gap, and under there it's a big order block. So we hope the price to get down this fair value gap and then continue going up. So how we enter here, for example, we enter at this point when we see big candle, just turn to small time frame zone, 5 minutes, 15 minutes or 5 minutes to find an entry point, it's normal, and put your profit point a little bit above the middle of the fair value gap. Or you can choose to make half profit here and half profit here in case it will not hit here, because it's a very strong fair value gap. It makes a very big price differences between two candle. Okay, so once we see the candle here, see the shadow, so we enter here. Okay, so I make a list here to tell what is liquidity grab and how it will happen. So first you will see a consolidation. No matter it's a box, like a box here, or it's a consolidation. Normally it's like a box, but sometimes it's not like a box, like here. Oh no, it's a box. Okay, we can see here it's a consolidation too. Here is a consolidation. It's a downward consolidation. Or you can see here it's a box consolidation here between these two prices. Or even it's uptrend consolidation, it's easy to find too. Here it's an uptrend consolidation. First you have to identify a consolidation. A second, we will see a breakout, and it's very intensively. It's not like a small candle. Like here you can see it's very intensively, just one candle going up to this level, and soon get pushed back to this price, back to the consolidation price zone. Yes, so we can see the price get reject and back to a consolidation zone and leave a very big upper or lower shadow. So this is the shadow. It's not a full candlestick. If you see it's a full candlestick, most of the time it's a true breakout. It's not fake. But if you see a big shadow, most of the time it's a fake breakout. For here, it's the liquidity grab. So once we see this, we go entry immediately in this price, like the higher point, or you want to see when the candle finish, like this. Either way, it's going to make you a very good profit and risk, like 4.8, or you entry here immediately. It's even better, 4.1, maybe you want to, okay, just leave it, 4.5, it's good. Very good risk. Whenever you entry, very good risk and profit. And 4, break out the pricing opposite side and intensively. You can see, follow up, the majority candle, it's going to a tour side and not going back. And it's a very big candle with a continuation. After this fake breakout or liquidity grab, the price will go the opposite side. And sometimes it will retest. It's not usual, but sometimes it happens to retest the support zone here. You can see it's happened 2 days ago. There's a liquidity grab here, and soon the price go to a tour side. But why it goes up, go back? Because it want to retest this price here, retest this price zone as a downtrend support. Once it reach, get reject and push down to a lower point here. So sometimes it will retest. It can be a good entry point here too. But if no, when you see this big candle, you should identify it as a liquidity grab and entry immediately. Like there's no time for you to wait, like maybe 15 minutes, only 15 minutes, you can identify this structure, and then you have to go in the price immediately. For example, if you hesitate a little bit, the price is already going down and not going back again. For example, if you enter here, it's not so bad too. But we can see if you wait a little bit, your profit and risk will be 1.2. and it's below 2. So normally we regard it as a not very good trade, because normally we find the profit risk above 2. So if it's lower than 2, maybe we don't want to enter it, or you must to put your stop loss here, just higher than this candle, and pray to God the price will not hit it here again when you entry. So it's more risky than you can, if you can do it here. If you do it right here, it's a little bit more risky, but still it's still profitable. 3.5, it's good, but you can see it's a little bit risky, because sometimes the price, this candle can just reach here to your stop loss and leave a big shadow and then keep continuing going down. So that's risky. So I tend to enter immediately here. So that's the SMC strategy. I think it's one of the most efficient or accurate to enter the market. It's very useful, and most of the time it will work. And also it will give you a very good profit and risk. For example, if you notice it's a liquidity grab and you enter immediately at this point, like it's no way you will, like almost no way you can get hit here, and also you get a very good profit. Even you put it at the upper side here, you can still get 3, but most likely you will not get hit your stop loss here. So we find some example here. A few days ago, we can see liquidity grab and the price go to our side, and here we see a price going between these two zones, and here we find a liquidity grab here. And you can see a consolidation point, a consolidation price zone. There's few times perhaps the price will get above the line, but soon will get rejected. But what's the differences between price reject, or it's a real fake breakout? It's a liquidity grab. We have to use the candle. It's very important, because we can see this price reject is with a very small candle. Here too, it's not very big. It's not impressive candle, but we can see here, like normally you can identify this candle, like it's much bigger than before. So we can see this is a breakout signal, and once it break out, the price get reject immediately here. This one's not very perfect, because there's no big shadow line here. But anyway, the second candle we can see get pushed back very soon. Let's turn to 5 minutes chart. If we can see more details, yes, we can see there's more compared to this one. This one leaves a big shadow here, not really big, but we can identify. And the following candle, it's bigger than usual in 5 minutes chart. This following green candle is bigger than usual. It's bigger than the green candle here, bigger than the green candle here. So we can see it's a liquidity grab. After this, grab all the sell side liquidity. Sell side liquidity means the price here have a lot of stop loss. Here. And here we called it buy side liquidity. Also a lot of stop loss. Never mind. We're going to ETH. Give me back my Bitcoin. Okay. So anyway, once it go grab the stop loss here, or the sell side liquidity, the price go opposite side here. So that's how we use the liquidity and liquidity grab to identify the market action or the price action. So right now I just entry here. I made this price action happening when I'm doing this video, and I just entry here right at this candle finish. I put my stop loss here and target the fair value gap, the middle of the fair value gap, or a little bit above here, and I made a 5.3 profit. And in general, that's that's very good profit and risk. And soon I will hit my profit and make a very good trade here. Okay, guys, thanks for watching today. And if you want to learn more strategy about SMC strategy or ICT, or you don't know how to make profit in the marketplace, contact me or leave a comment. And don't forget to subscribe my channel and use Ibit exchange to do the trade. And use my link to register if you haven't registered any exchange. If you want to know how to learn more, just contact me in WhatsApp, and see you next time. This is Joseph. Bye.